Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi, and the closing trades aren't looking that great if you're a bull. And we say that because throughout the trading session, we have been in the red for most part. Yes, we have bounced off the lowest point of the trading session, but it's RBI decision to put that ICRR or incremental CRR that has spooked the banks today. So that the banking index is down almost 400 points, and Nifty 2 is just around that 19,500 mark, as I pointed out. What else is happening in the market? Let's take a look at that as well, because in terms of sectors, it continues to be quite weak. Reliance is trying to bat for the bulls, but it's HDFC Bank which is dragging. So Reliance is adding almost 20 points on the upside, but most of that is getting negated because of the pressure coming in from HDFC Bank and ICICI Bank. Metals, however, continue to shine. Remember, globally as well, we have seen that Asian markets have been doing quite well today in the trading session. European markets, they have started with a gain of around 0.5 to 1.5%. And the US futures, they are quite strong right now. Dow futures, for instance, is around 200 points. And all eyes, of course, are also on the US inflation. So we're watching out for that as well. Ahead of that, at least the US market is holding up. Zee Entertainment, however, is not holding up ahead of that big event, which is lined up in terms of the NCLT verdict. It's expected anytime now. It was going strong, so for most part of the day it was okay. But Aisha, in the last 30 minutes, that stock has slipped. I'm not sure if the street is expecting that the merger, might be hitting the roadblocks, because the stock is definitely off.
Yeah, the stock is off, and more importantly, there are a lot of other nitty-gritties and overhangs as well, which I guess are up in the air. Shortly, we will be hearing what the NCLT verdict is in the Zee-Sony merger case. Remember, NCLT had earlier revised, or rather reserved, the order after hearing all parties. Axis Finance, other creditors, they had appealed against the merger because of the pending dues, and Zee Entertainment Council had said that the merger should go through even without proposing a CEO. In fact, SEBI is yet to pass the final order against Subhash Chandra as well as Puneet Goenka. Their fate as well on the Zee board, remember, is a bit up in the air. In the meantime, Grasim's numbers, and I can just see optically those numbers don't look quite all that impressive. The stock as well under pressure as we speak right now. That's Grasim in trade for you. For overall market, like Anisha mentioned, it's banks under pressure. ITC is down about almost 2%. There's Nestle Britannia as well under pressure. Axis, Bharti, Maruti. A lot of the market as we speak right now is under pressure as we speak. Of course, we're going to be taking stock of what are the other buzzers in trade, what is it that you should be doing after this fall post policy. But before anything else, let's just address some of the other earnings. And let's talk about Thomas Cook. Remember, the first quarter, the loss is actually reversed on a sequential basis. So impressive set in that sense. Let's welcome on board Madhavan Menon, the CMD at Thomas Cook, joining in on the show right now. Mr. Menon, great to have you today on ET Now. Good afternoon. Tell us how the operational business is looking. While sequentially, definitely the top line has seen a bump up, but what's the view going forward?
Good afternoon, Anisha. Good afternoon, Aisha. Thanks for having me on board. Actually, if you look at the numbers, by removing the mark-to-market, we've actually been profitable for 3 quarters. But having said that, I think historically, this quarter has always been a very profitable quarter for us, primarily because there is a lot of travel that takes place. All your European travel, this time it's been added up by domestic travel as well as short-haul travel in the Indian Ocean periphery. So we've seen a very good leisure quarter. Additionally, the foreign exchange business has really kicked in. We've seen significant numbers, especially the retail numbers have gone up very well. We've also seen activity across our student segments and the various other foreign exchange segments. The other outstanding performer in the group has been Sterling Holidays. Here, if you remember, I talked about the fact that we've converted their focus from being a timeshare into a hospitality play, and they have done extremely well. This was the 9th consecutive quarter that they've been profitable. Both these companies have had record profits in this last quarter. So that explains the far better profits. The other aspect, which I think I must mention here, is that we are completely focused on margins. And the margins that we have right now are significantly higher than pre-COVID, and we intend to sustain them. Another element, of course, is the fact that we've rationalized our costs. And as we stand, the group is approximately 32% lower than what it was pre-COVID, and all this is falling to the bottom line. If you look at Thomas Cook standalone or even Sterling, they are in the 28 to 33% savings in terms of costs. So, I think if we put all this together, that explains the result that we declared yesterday.
Sure. Sorry, Mr. Menon, I just want you to hold that thought because there's a breaking news which is developing right now. The India Tribunal has approved the Zee Entertainment Sony merger. NCLT has gone ahead and approved that merger that Zee and Sony were talking about. This was the big overhang on that stock, whether it will go through, whether it will not go through. The decision is finally out. There have been multiple hearings on it. And look at that surge on that counter. It's 3% higher. They don't care about who's going to be the leader at the moment, whether it is going to be Mr. Goenka or not, because this has been categorically said time and again that the face of the CEO can be different, but that cannot be the reason to hold back this merger. So now that final decision has come through, NCLT has approved the Zee-Sony merger. Incidentally, we also have Mr. Bhasin with us in the studio. Mr. Bhasin, do you watch this one closely, Zee Entertainment at all?
Well, yes, Anisha, I stuck my neck out at 185 and I said the market cap cannot be so low. And with 3% stake, how long could you have the Goenkas hold you to ransom? So Sony here means it's a big positive, and I don't even rule out, something like 450 coming on the stock over the next 1 year. I think this is a very, very big positive, and with the World Cup cricket and the other things to go with it, Anisha, this could be a real game changer on media and particularly for Zee.
Oh yeah, it's a big, big overhang, and I don't think, with the kind of free float that you have on Zee, almost about 90%, the gains are not going to get restricted here. You will see many, many moves coming in and, significant amount of upside as well. HB Ranina, in fact, joins in on the show right now. Mr. Ranina, quite the respite. The NCLT has now approved the Zee-Sony merger, and I think there have been absolutely no objections here.
Yeah, very good. This is good news, excellent news. And I'm very happy to be part of your program to give you my reaction. But I think it's a very, very wonderful news that this merger has gone through and will go through. Because whatever may be the other issues, I think they can be sorted out in course of time. Whether the person is fit to be a managing director or not, that's a separate issue. Anybody can become a managing director, any competent person. And therefore, the merger has to go through. You can't hold up a merger and sacrifice the interest of the stakeholders and shareholders.
Yes, that good news definitely coming in, Mr. Ranina. But I think we are joined by other guests as well. Mr. Majid Menon, member of Supreme Court Law, also joins us on the show. Majid, what's your first take on this final announcement coming in? Do you see any further roadblocks, or now all the decks have been cleared and this merger will go through?
Well, this merger has been welcome, as we hear. It's a good news for the people whose stakeholders. As a matter of fact, if you recall, the Learned Counsel, Janak Dwarkadas, representing Zee Entertainment Enterprises Limited, said that the scheme of arrangement between Zee and Sony had been approved by 99.97% of shareholders of the company, as well as BSE, NSE, and CCI. But therefore, if there was almost unanimity in seeking merger, certainly the decision taken by the National Company Law Tribunal today is welcome almost in all quarters.
Right, Mr. Ranina, the same thing really. Is this now a final green signal, or do you think there could be some more stumbling blocks after this?
Well, I don't think there could be stumbling blocks, because who will take objection to this? So I don't think there will be any further delays in this matter. And I'm sure this matter will now take traction, and the merger process, the amalgamation process will all go on stream. So I don't see any difficulty now at all.
Point taken. But Mr. Ranina, what's your own expectation of the timeline of this? Any sense in terms of when that merger can be through? Is it just going to be 3 to 6 months from here on? Could it be longer?
No, I think 3 to 4 months maximum. I don't think there should be any difficulty in proceeding with the process. Whatever is the statutory requirement will be complied with. and all the merger documents, everything will be put in place. Once that happens, I think the merger will simply go through.
Because this one has seen many stumbles and hurdles before it kind of came through, but now it's out. It's a 10% move that we are seeing on Zee Entertainment. No surprise given the fact that this was the biggest overhang on the counter. But let's welcome on board Jinesh Joshi as well, the research analyst at Prabhudas Leeladhar. Jinesh, what's your sense? Because a lot of analysts were calling it the re-rating trigger, pretty much a binary moment of sorts for Zee Entertainment. Your sense, and what's the kind of target do you have for Zee?
Yeah, obviously, I mean, this is a big sigh of relief that has come through, because the merger was in limbo for about 2 years odd, and now with the verdict finally coming in the favor of Zee, the entire construct will now change as to what can the merge co report in terms of FY25 PAT and all. So the entire theory changes from here on, and we maintain our positive stance on the company. And as per our last report, our TP is at about 275 odd.
Mr. Ranina, I guess, what now remains in the pipeline would be SEBI's final order against Subhash Chandra and Puneet Goenka, right? I mean, what could we expect there? Because what we understand is that the SEBI chairperson may herself hear the replies of Chandra and Goenka in the case.
Well, that's an issue on which it's very difficult to comment. I suppose each one will defend himself, and the major shareholders will also put forth their point of view. If Sony feels that Puneet is a good person, maybe they'll present their case again, and maybe his name will be cleared in course of time. So it's very difficult to say how that will pan out, but it will depend on the major shareholders. And if they support the two gentlemen, then I think they can once again be reappointed, unless it can be shown that there were very serious charges against them and not mere allegations where the charges have been proved.
Point taken, but I think we have our colleague Ankur also joining us from outside the tribunal where this entire action is taking place. What do you make of this, and what's the latest, Ankur, that you're hearing?
Yes, definitely. We are just outside NCLT, and NCLT has
Ankur, but let me toss that question to Mr. Sanjay Ashar as well, the senior partner at Crawford Bailey and Company joining us. Mr. Ashar, what's your sense of this, final clearance coming in from NCLT? What's the timeline you think that the merger will now fructify on the books as well? Sanjay, the question is for you.
Sorry. The line is bad. Just if you could kindly repeat, please.
To you was, what do you make of this final judgment being out? Do you think this was the last straw, and finally now the merger will go through and it will consummate in 3 to 4 months?
Yes, I would believe that the merger will go through and everything will get completed in 3 to 4 months' time. So the deck is all clear now, and I don't foresee any legal hurdle going forward. There could be some irritants in between in case somebody makes an application or challenges anything, but otherwise the decks are now clear.
Right. Okay. So that really is the take coming in on the merger. I just want to quickly revisit what the stock price as well has settled in at, and what is it that we're seeing on the stock right now. It's really on a tear, and I don't think it's going to stall here. 10% and still counting higher. Jinesh, in terms of size, I guess what we're looking at in the offing is one of the largest media conglomerates that's going to be created in the country, right? I mean, this is a re-rating for Zee.
I mean, if you look at the combined entity revenue estimate, we are expecting somewhere around 18,000 crores in FY25, and you are looking at a PAT of about 2,500 to 2,600 crores. So definitely, it is the scale and size which will kind of appeal to investors, and from here on, as I mentioned previously, the entire construct changes, and how people view Zee is going to change from here on.
Just quickly bring on board Ankur as well, because I think he's been standing by to get us the latest. Ankur, tell us, what did the tribunal have to really say?
Yes, one word order from court this time, that the merger is approved. And another thing which was mentioned, that all the objections which were raised against the merger has been dismissed. So all in all, it is complete approval on the merger. There were several objections, if you would recall, that in the likes of Axis Finance, JC Flowers and other creditors had raised objections in the court saying that their dues are not paid and hence the merger should not be approved. There were also questions about the design of the deal, why the payment is being made in Mauritius, and that was done allegedly to avoid those payments. But the contention of the company was that this is a group company whose payments were remaining, and hence you cannot be even liable for payment because you are not even creditors. So these were the contentions which was given by the council earlier in the court, and hence at least this oral order is concerned, all these contentions have been accepted, and finally this merger is a done deal as of now. However, the legal tangle still remains, because you would recall that SEBI final order against the promoters of Zee Entertainment is still remaining. That is still to be heard. In fact, Puneet Goenka and Subhash Goenka is supposed to appear before SEBI, and after that the final order will come, and a separate case in that matter is continuing in Securities Appellate Tribunal. And another point to note here is that whether or not all these entities who were opposing the deal, they moved to higher court.
Okay, Mr. Bhasin, let me get your thoughts as well in a thumping buy now on Zee.
Well, as a disclosure, we own Zee. It's one of our top holding. We had the conviction to stay put, and we knew sooner rather than the later this whole episode of the Goenkas will get through. Aisha, I'll just give you a brief. Walt Disney trades at a market cap of $200 billion. How could you have Zee at 17,000? Arguably the largest player. And by the way, you people are going to thrive your way, laugh your way over the next few years, because media is the be all and all, whether it's journalism on the business side, but look at the type of plethora of portfolio they have. And just give it a rating that Sony now has not invested for 2 years. And India is their biggest market. Japan has plateaued. Just the sheer size of everyone watching movies and the sports channel, I think this is a blockbuster. 400 rupees by next Diwali is very much on the card, maybe earlier.
Okay, so that's the take coming in. 400 on the cards for Zee Entertainment. We got you a roundup from the lawyers, the reporter on the ground, what the research analysts are making, what the market men are making of this move. And the consensus seems to be that all decks are now cleared. That Bollywood movie that we have been seeing had tears, had a lot of revelations and twists and turns, but by the end of it, action as well. But by the end of it, it is a happy ending, at least for now. I don't know if there's going to be another sequel of it or not, but for now, it's the happy ending that Zee Entertainment is getting. That so-called marriage with Sony is finalized, and that merger is going to go through, and that's the big news that we are tracking at this point of time. The stock high by 10%. To all our guests for joining us with the take on that, thank you so much for joining us, right from Sanjay, Janesh, HP Ranina, as well as Mr. Mevin. Thank you so much for that. But with that, taking a short breather on the show, don't go anywhere apart from Zee Entertainment as well. There's lots to track in the market.
Well, the marriage has got its blessings finally from the NCLT, and the Zee-Sony merger is on the cards. It's been given a green signal. A big move on Zee, 10% higher, locked in circuit, 266 is where the stock is. And maybe, given the kind of big overhang this was, for the many consecutive days, the stock is going to be locked in circuit, for all you know. But let's talk about the rest of the market, because the rest of the market, the sentiment was a little soured after the ICRR announcement came by from the governor, although he did clarify that this is only a temporary implementation, and September 8th it's going to be revised. But no, the market mood hasn't quite changed. Having said that, the big moves are only outside the index. So look at an MFSL that's surged up 10% as we speak right now. If we can just fire that intraday graph for you. This trend, big mover yesterday when the numbers came out, continues to hold higher, another 6.5% move. The stock is now standing at 1900 plus levels. India Cement has been on a tear from the word go today, 5% move coming in there as well. Canfin Homes, almost a 3% move there. Manappuram, almost a 3% move there as well. And I can really go on with the list of movers from within the broader end of the market. So let's quickly welcome on board our chartists as well and get in a quick commentary from them. Manoj, hi, afternoon. What are you making of this move of the market? Consolidation on Monday. Yesterday saw a late stage recovery, made it back to 19,600. And today the policy, I guess, played a spoiler.
Yeah, good afternoon. Now, I guess this August series, the entire equation is simple. What we had in July, we have seen an incremental 27 lakhs of position in the Nifty futures. So we started the August series with a good 1.1 odd crores, and then I guess this has been the fourth or fifth time that Nifty has resisted the 19,650, and this time the 19,600 call writer seems to be very serious because it has tried to breach it thrice, but again the selling has been very linear and at least a good 80, 90 odd points. So now I understand that a simple way to look into this Nifty would be that till the time we get a closing above 960, 19,650, only then the bias would turn and then we can expect the Nifty to go back to a 20,000 odd. Else it again enters into a consolidation zone where on the downside we believe that 19,300 to 350 might be a support. Now because today's expiry, I guess even today intraday if you see we are almost at 19,500 odd and that 19,480 seems to be a support. So an intraday bounce of 30 to 50 odd points can be roped in, but the positional view is we need to close above 19,650, else we might be seeing some profit booking, but 250, 300 points on the index is very much possible.
Okay, point taken. That's the view coming in as far as index is concerned. But look at Z, the 10% sort of circuit has opened for the time being and it's now in 15%. The move is coming in 280 and I'm sure it's not stopping here. There's going to be a bit of a runaway rally because it was really a binary moment of sorts for the stock. The reason why the institutional, guys, etc. were not getting into the counter was the fact that we had seen that this overhang play out, but now it seems that it's out of the woods. Naresh, your view on Zee Entertainment as well as the whole market?
So, Zee, this is the third time we've seen such a gap up, or rather the fourth time. It was first in September 21. So, if we go to the previous gap up where we saw and the stock used to sustain was 290 odd levels. So 290 was the high in 2022. So that should be a price point 290 to 300 where it should see a pause, and that should be the upper end maximum target. So I would be of a view that we are getting closer to it. We are almost at 278. So not much upside left from here on as a trade. So for now, look at booking profits in that 290, 300 mark. Overall on the markets, the same view, 19,300 to 400 is the lower end of the range. 19,650 to 19,700 is clearly becoming the upper end of the range. It's only when we go beyond this, a trending move comes on the index. In this period, time to be more defensive and look stock specific and look at new possible trades coming in. So we are seeing oil and gas as a sector, which looks very interesting given the move in crude, which is back above $85.
Before we let you go, I just want to talk about where the rally is consistent, and I guess it's not going to stall anytime soon, the broader end of the market, right? That's where the lively action is. Any stocks you think our viewers could buy right now?
Well, you put it correctly, you're missing the woods for the trees. If you think of a 300 point on the index, that's hardly, it is pitfall.
Yeah.
And if it doesn't move 300 points, so what's the, look at the stocks, look at mid-cap pharma, look at mid-cap IT, they refuse to give up. GMR is at all-time highs, so is Trent and so is IEX.
Yeah.
So where is the, look at stocks like now, if I want to say some names, it's going to be Lupin, it's going to be Maruti. Look, Maruti will sell 35 lakh cars this year and they used to sell 17, 18 lakh. That's the order book. Third is a stock called Apollo Hospital. Tomorrow numbers are going to be out. If I saw Indraprastha Hospital or KIMS, numbers are going to be the best in the last 3 quarters combined. Fourthly, look at a stock like Devyani. Replace Jubilant with Devyani. Devyani's portfolio is doing extremely well and that one-off for Nigeria is just a provisioning. And last but not least, I think the fintechs which I've been saying, Paytm, Zomato and PB Fintech, they may have gone from 50 to 100, but they fell from 150 to 100. So if you are looking for 200 in the next 2 years or the next year, these are the stocks to put your money where your mouth is. I am very, very constructive on the fintech and the digital basket. And I think these three fit the bill perfectly to do a SIP. But in large caps, I think this is a brilliant opportunity for Maruti, Lupin, Apollo Hospital and last but not least Gujarat Gas. The largest city gas distribution and gas prices globally have fallen. Their margins will only rise and volumes will pick up. At 458, 460, I think this stock is headed to 550.
Okay, so those are the gems for you, right? From a GMR to a Lupin to a Maruti, Apollo Hospital and a whatnot, Gujarat Gas, etc. as well. All of these counters is something that you can buy to make that multi-bagger idea. Thank you, Mr. Basin, for joining us in the studio and talking to us about your top bets. But on that note, let's slip into a very short break. We haven't done that in a while, so let's slip into a very short break. When we come back, we'll track the last 30 minutes of trading action. And remember, it's the weekly options expiry, so we'll watch out what happens with respect to that as well. Welcome back. Well, Zee Entertainment might be locked in 15% circuit for now, but the market continues to be in a bit of a sour mood. It's still down 0.5%. Yes, we're off the lowest point of the trading session, but not that we managed to cross that 19,550 mark at all. Manoj, what's your sense regarding Bank Nifty? Because that one has been the key underperformer. While, of course, the index has been down, it's Bank Nifty which is down, what, almost 2% this month so far?
Yeah, see the equation with the bank Nifty is, if you remember, it was, I guess, April last year when we had the HDFC event, and there was a positional open interest into the contract of almost 35 odd lakhs. And then in December, we saw that unwinding. Now, there is a pair trade or a correlation that goes in between the Nifty and Bank Nifty, which is currently at almost 2.29. So, the Bank Nifty is almost 2.29 times of what the Nifty is. So, what we believe that this has got a good support at 2.26, and the resistance would be somewhere close to 2.38. So simply saying that we believe that Bank Nifty has a very good support at 44,200 to 350, and there is a possibility we might extend it again back to 46,200 odd. So as of now, we believe that the underperformance which was happening, which might not be ceased from here, and there is a possibility of a bounce back. Intraday specifically, now we have just 30 minutes because this is an expiry day. Even on the Nifty, if you see 19,500 strike, the put base is quite strong and a good 80 points above, we have a good call rating at 19,600. So buy a 19,500 call option and get it for 20 to 30 odd rupees. The stop loss should be 5, and a good ambitious target of 65 to 70 is possible in that.
Good to have you on the show. We'll let you go on that note. Let me also welcome on board Rajesh Palvia as well as Kunj Bansal joining in on the show right now. Kunj, I guess Zee is where all the action is right now. News just in, the NCLT has approved the Zee merger with Sony India. They've dismissed all objections from creditors. The only overhang, I guess, now or the other event is that SEBI is yet to pass the final order against Subhash Chandra and Puneet Goenka. But does now Zee become a buy for you?
I wish I had such simple answers to such simple questions. Market is God. Market as well as stocks, as we all know, move basically on two reasons. One, in the medium and long term on the consistent financial performance that a company delivers, good or bad, and in the short term on news flow, sentiment, demand and supply and all that. Now, there are some stocks, some managements wherein the news flows and the sentiments and the demand supply pressures are always more dominant over the financials. So very difficult to take such calls. These are more or rather better taken call by studying of the technical charts and patterns instead of trying to apply mind on the fundamental side of it.
Suresh, now locked at 15% of a move, 278 plus. Let's revisit your strategy on Zee.
So like I discussed some time back, 280 was a target price and 300 was the next. 300 was the last gap up. So I would expect it to pause around the 300 mark in this move. So I think it should open just few minutes before the end of day, the circuit. If that comes, it could be closer to 300. And that's the price point where I would expect it to pause.
Okay, so that's the take coming in. Kunj, I wanted to shift focus away from Zee Entertainment now and talk about Max Financial. In fact, we should also be playing in the bite of the management because there seems to be a vote of confidence coming in with this entire infusion from Axis Bank to the tune of 1,600 crores. But as a business, in terms of insurance, which are your top bets, Kunj?
Yeah, so insurance industry has really gone through a lot, especially in last 3-4 years. In terms of continuous withdrawal of support by government across the various areas. In addition to the government support withdrawal, in terms of the help from the distribution commission and the incentives to be distributed to distributors and things like that. So I think today insurance sector is at a place wherein whatever valuation it gets will be on its standalone performance basis and not on the basis of crutches of the policy support like taxation benefit and things like that. And which is where after the announcement as recently as the last one being in the budget in February about 6 months ago, we saw a sharp dip in the whole insurance sector as a whole because of the withdrawal of the tax benefit above I think 5 lakh rupees limit or something like that. But from there on, we have surprisingly seen the whole insurance sector kind of getting re-rated, the stocks moving up, obviously the valuations also moving up in line with that. A few things. One, in general, we have seen interest in the market. We have seen the global money coming in, except in last few days when again it has become subdued, but otherwise 3 months have really been good. And as I said, I think finally where market is able to realize that now whatever reward market gives to the insurance sector will be on its standalone performance instead of the performance on the support of crutches. So this is where we are today in terms of the buying investment in the insurance sector could continue likely.
Take coming in fact, since we were talking about Max Financial, let's also listen into what the management had to say on their con call.
Our solvency margin is going to go up by 39%, which will give us good capital in the business, which is required for growth. We have very aspirational plans for future, which we have been repeating again and again. We have specific plans to drive growth and growth upwards of 20%. We have plans to become dominant in two areas, protection as well as retirement, and within that annuity. And as you know, these product categories require capital because the initial requirement of capital on both these products is higher than the savings plans. For this to happen, we do require capital as a business, and we actually raised this with our shareholders, and shareholders kindly agreed that rather than doing a secondary, this will be a primary where the capital will come to Max Life Insurance. It's really a positive step for our growth, and we are very optimistic that this capital which is coming to our business will be good for driving our growth for at least next 18 to 24 months. So that gives us good capital for growth.
Let's just revisit some of the other big buzzers in trade. I mean, talking about financials, look at the move on an MFSL. Look at what's happening with the Manappuram. That's holding up very, very smartly. Of course, topping the charts continues to be Zee. Even some of the banking names like IndusInd are fairly resilient in an otherwise weak and bleak environment for banks ever since that ICRR announcement came by in the policy. IndusInd Bank is still going strong, up about 1.5%, did fall post-policy, but from there has seen quite the steady recovery. But still under pressure for the rest of the banking packs. So Kotak, Axis, HDFC Bank, they're all still very much in the red as we speak. And I think that is the case with an ICICI Bank and SBI, although SBI has recovered much of its lost ground, now lying only flat in trade as we speak right now. Kunj, before we wind up for the day, just wanted to understand if you think there are still opportunities in the market and where you do see both PE as well as earnings growth.
Yeah, sure. So before I exactly come to that, very quickly, few numbers. If we look at the recent past, on 20th July is when we had the peak of the market. Nifty almost just falling short of touching 20,000 and coming back from there. So last 20 days, we have been in a correction to a flat movement of the market. In fact, if we expand this horizon slightly longer, October 2021 is when we were at 18,500 on Nifty, and today at around 19,500. So that's hardly 6 to 7% move in more than 20 months or so of the market. So that's the position. So it's largely reflecting a consolidation that has been happening. Of course, you can look at it the recent March lows from where we have moved 16-17%. Anyway, coming back, yes, there are still opportunities in the market which remain at all points of time a combination of fundamentals and valuation. I think pharma is one sector which had remained neglected for long, for last 7-8 years or so, and which is where we seem to have been seeing the interest coming in, partly or largely backed by the finally improving financial numbers both in the US market as well as in the Indian market. And I think that's where something similar like that can continue to remain an investment opportunity.
Numbers for KRBL were also out and they looked healthy on a year-on-year basis, while for Chemplast Samna there has been a bit of a deterioration. The company has reported a loss versus profits, but KRBL is reacting positively. It's moving higher around 3%. But let's quickly go across to my colleague Sharat to find out what the buzz is in the dealing rooms today.
Well, yes, in focus we are having Relaxo footwear, and what we are hearing from the dealers is this certain counters are seeing buying coming from domestic institutions and also certain HNI as well. Now, do remember that the delivery of the stock itself, that has increased from its 2-day average of almost, you could say, 49% to 62% levels. That means the delivery levels are going high, and the large key DI invested already in the company includes SBI Mutual Fund, having roughly 7% stake in the company. Apart from that, do remember the stock is still down 13% from its 2022 highs itself, and recently the Q1 numbers came, and of course there were weak set of numbers and consumption impact was there, but there are certain green shoots coming in, and especially the performance of the open and closed footwear category, that was pretty strong for Q1, and of course the monsoon season has been kicked in. Because of that, the demand has gone up, but the management commentary has also been strong when it comes to the double-digit volume growth which they have actually maintained for FY24, and also they're expecting the margin recovery to kick in, and of course they are also stated that the average selling prices, the ASP prices, they are not going to go for a cut during the festive season. And lastly, the market demand, that itself overall is expected to increase from the second half of FY24.
Thank you so much for that. I think the other reason why KRBL is going higher is also...
So I think that position is going to expire today, and then possibly tomorrow onward we can see again market or index can start again railing further higher. So we are projecting a target of 19,750 from here onward, and keeping a stop loss of 19,480 for Nifty to buy in this decline. On the Bank Nifty also, 45,000 is the key level. But at the current level, as we are holding 44,300, still view on the Bank Nifty is on the buying side only. 44,300 is the stop loss to hold a long position on the Bank Nifty. Some pressure is there, but looking at the overall data setup, we expect that if we hold this level, then possibly we can expect a rally in the Bank Nifty also from tomorrow onwards. So we are projecting target of 45,000 immediately for Bank Nifty also.
Rajesh, give us some BTST ideas too.
So the stock which we like for the BTST perspective, that is HDFC AMC, is looking very promising. Short covering action is there. Stock managed to give breakout of its previous swing high, and looking at the overall setup, we expect that HDFC AMC can continue furthermore upside. 2640 is the immediate target we are projecting, and one can buy with a stop loss of 2550. Another stock that we like for BTST point of view, that is ONGC. Very sustained buying action is happening in the stock. Series of higher top, higher bottom formation taking place. Stock is moving in upsloping channel on the daily chart. Today's session also there is a buying interest for the stock. We expect ONGC can scale up to the level of 187. So buy with stop loss of 174.
Naresh, let's have your BTST trades too.
So first is again ONGC only. The stock looks very interesting on the longer term chart as well. On the short term chart also showing a lot of strength. Stop loss at 176, target of 1. Second is a buy in IndusInd Bank. Clearly relative strength in the market where Bank Nifty continues to correct. Heavyweights continue to correct. The stock has hit positive for the day and showing a lot of momentum, not far away from a 52-week high. Stop loss at 1420 now revised, and a target price of 1470.
Okay, point taken. Those are the BTSC ideas coming in from our charters. But what else is buzzing? Look at the move on JSW Energy. There's not any fresh news flow as such, but that stock is high around 7%. Kunj, what's your take on the power space? I mean, Tata Power came out with its numbers. It was a very steady set. And when we asked the management that, Street is complaining that there's no fresh trigger for the counter, he said that given the fact we are, providing stability of earnings, that's a trigger enough, because historically the earnings have been very volatile. What's your take?
Yeah, so it's always difficult to connect, especially for managements, their performance, and expect market to reward the market cap in a certain way. Market has its own ways of rewarding the market cap. As we were discussing earlier, also in the medium to long term, it always looks at financial consistency of financial delivery, and in the short term, the news flows, the policies, the demand supply, and the sentiments. Utility as a space has always been patchy. There are phases wherein it doesn't perform, just remains flat, in fact underperforms the market, and there are phases when suddenly there is a re-rating for the sector as a whole, within that some specific players. Now in power sector, we obviously have been seeing that for last 2 years there has been a consistent movement away from thermal to other renewable sources, and which is where all the smarter managements, the companies are entering. So I think going forward, the reward will come to such players which have their power generation coming in from multiple sources, including more focus on the renewable energy sources.
Okay, important day. You've got Hero MotoCorp, which is due to deliver its numbers, as is Apollo Hospitals. So let me quickly take it across to Srishti, find out what the street is anticipating from these two very important numbers, Srishti. Let's start off first with Hero MotoCorp.
Well, yes, absolutely. Talking about Hero MotoCorp, we are expecting a decent set of numbers given the fact that the volumes have seen a jump of 6.5% on a sequential basis, and similar kind of a growth we are expecting onto the top line of the company. Talking about EBITDA, a jump of 9% is what we are expecting, and the margins are expected to see a jump of just 20 basis points because the raw material cost inflation will roll its play. But other than that, the company has been hiking the prices of its vehicles. On an average, 9% is the YY average selling price hike, is what the analysts are factoring in. On the back of that, 13.2% is the margin figure, is what we are expecting. And lastly, onto the bottom line, almost a flattish growth on a sequential basis. 872 crores is the expectation, but the company has been doing great in terms of the new bookings for its Harley X440, but now the bookings have been halted. So going ahead, what is the commentary on that particular front especially will be the key to watch out for, and as well as their demand outlook in the domestic market. So these are something that we'll be watching out for Hero MotoCorp earnings. It's about Hero MotoCorp. I guess the earnings are later today around 6 p.m. But what about Apollo Hospital? It comes out with earnings tomorrow. What are the expectations there? Set expected from Apollo Hospitals as well, because from the whole hospital pack we are seeing a good set of numbers. And for Apollo Hospitals, the major driver will be the pharmacy segment, because for the hospital occupancy level, analysts are factoring in a steady quarter-on-quarter this time growth coming in for their occupancy. That's expected to remain steady, but when it comes to their pharmacy business, that could give a good push. Over 20% jump on a YY basis is what they are expecting. 1800 crores onto the pharmacy segment is what they are looking forward to, and this growth will be led by the store additions and the higher sales from the existing stores. Let's talk about the numbers then. A jump of 2.5% is what we are expecting. 4,402 crores coming to EBITDA figure. A jump of 5.1% is what we are expecting, and margins are expected to improve just a bit from 11.3% in Q4 to 11.7% this time around. And lastly, onto the bottom line, a profit figure of 181 crores is what we are expecting at ET now. But when it comes to the losses from 24/7, that's expected to remain elevated at this point in time. So going ahead, how is the company looking at reducing the loss from 24/7 as well as their occupancy level, and updates on the organic, inorganic expansion plans? These will be the key things to watch out for when it comes to Apollo Hospital earnings. Back to you.
Okay, that's Apollo Hospitals as well as Hero MotoCorp, which is due to report its numbers today. Apollo Hospitals a little bit, of course, under pressure, 1.25% lower, as is the case with Hero MotoCorp. Let's see where the market as well is headed. I don't think we've seen much of an material improvement, although given the weekly expiry, must admit that we've made it back to 19,600, at least for the Nifty futures, not quite for the spot still. But a 0.5% dip is something which is par for the course, right? After the announcement that came by from the Reserve Bank governor, interim as it may be, but a move to tighten liquidity nonetheless. So yeah, Asian Paints, Kotak Bank, Britannia, Nestle, HDFC Life, Axis, Maruti, ICICI Bank, Bharti, Tata Motors, they've all been in the red and a little bit under pressure. Rajesh, wanted to get your take on where you see the Nifty Bank headed next in particular.
So Bank Nifty, as we have seen a corrective action in today's session, but still as we are holding 44,300, which is the important support area. If you look at the next week put base as well as the monthly put base, that is very much there at 44,300, 44,200. So we are very much holding those level on the Bank Nifty spot. So till we are holding these level, we are very much optimistic that there could be a possibility of again pullback action from tomorrow onwards, and possibly on the higher side 45,000 is likely to act as a immediate supply zone. Once we crosses those levels, then this rally can extend towards 45,400. most of the banking stocks are showing accumulation and buying interest at the lower level. So we expect some of the private banks may again, start showing some uptick from here onward. So Bank Nifty is also attractive. It's attractive level to again, reinitiate the buy in this decline.
Okay, so that's the take coming in at that. Some of those indices are available at good levels to buy because the long-term uptrend is likely to continue, but that trend wasn't working out today. On that note, we let you go, gentlemen. Rajesh, Kunj, as well as Naresh, thank you so much for joining us on the show. So the day again has belonged to the bears because for most part of the trading session, we were trading in the red zone. That is how we are ending the day as well. 19,550. The advanced decline ratio too was favoring the declines, and there were a lot of jagged edges when it comes to the mid-cap and small-cap indices too, because they too are going home a bit tempered, just around that flat line, but nonetheless a pressure coming in as far as the broader markets are concerned as well. Sectorally speaking, it was metals that continued to shine today. So that index was up around 0.6%, and then that big jump on Zee Entertainment, 16% higher as far as Zee Entertainment is concerned, and that took the entire media basket high by around 6 percentage points. Of course, it's the biggest single day gain that we have seen in the many months for Zee Entertainment. On the back foot, however, was FMCG. So Marico, Britannia, Tata Consumers, Nestle, these were the stocks which ended in the red. And then banking names, they were coming under a lot of pressure as we were highlighting. The incremental CRR did not help their case. So whether it was AU Small Finance Bank, Kotak Bank, PSU banks, they were all coming under pressure, even Maharashtra Bank, Bank of India. No respite in sight as far as the banking names are concerned. A lot of result reactions as well. So right from Rock Engineering, which was up 10%, Force Motors, Jubilant Farm, Manappuram Finance. You also had Trent, which was high by around 6%, and 3M India also goes home with a gain of around 5%. KPR Mill, that result reaction and buyback support also favored the stock. On the losing side, Granules was down a solid 7%. Prestige saw a bit of downgrade from a couple of brokerages. 5% lower on that one. And then other names like Bata, Pidilite, Metro, Biocon, they were also a bit sluggish. So not much really to talk about in terms of the market mood because it continues to be very sideways, stuck in that 19,500 to 600.
Yeah, absolutely. And Zee clearly was the big star performer today, almost a 16% surge, over 15% actually is where it's finally settled in at 281 on the stock. MFSL, another over 8% move on the stock. Brilliant of a move coming in for Trent on 2 consecutive trading sessions. First the earnings and then the follow through that one has seen today. Over a 5.5% move on Trent. Page Industries, interestingly ahead of its numbers, or rather the numbers are today in fact 3% higher. India Cements up about almost 5%. I stand corrected. Page numbers are out. A good earnings reaction there. But one must also, point out the weak links in the market. Besides all the large caps that Anisha highlighted, there was also Granules. Again, earnings reaction there. Pidilite, Bata, MGL. These were some of the sour points from within the broader end of the market. But not bad. Less than 0.5% lower is where we're shutting shop. Holding on to that 19,500 print. For now, it's a goodbye from Anisha and me.